Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, President Trump's new tariff threat. In a late-night Truth Social post, the president saying BRICS nations may face an additional 10% tariff. Plus, confusion over the July 9th tariff deadline also weighing on investors. The Trump administration says either deals will get done or letters will be sent by Wednesday. And then if progress isn't made, new tariff rates will go into effect August 1st. U.S. futures pointing to a lower open. Now, this, of course, is after the S&P 500 and NASDAQ closed at record highs last week before the holiday weekend. Weighing on the NASDAQ this morning, Tesla, the stock sliding as CEO Elon Musk gets political once again, announcing he's launching a new political party. He calls it the America Party. One analyst now saying this is exactly the opposite direction that Tesla investors and shareholders want him to take during this crucial period for the Tesla story. On top of all that, another analyst cut the stock to market perform, blaming the Trump administration's tax bill, which phases out the electric vehicle tax credit. And investors are eyeing the next big catalyst, earnings. A few key names reporting this week to watch, including Delta. It'll give insight into the health of the consumer, but expectations are low after the airline withdrew full-year guidance earlier this year. Let's get a more detailed look at stock futures here this morning. All three major averages pointing to a lower open, but as you can see, it is the NASDAQ that is leading those declines, in part because of Tesla. And as I mentioned, the context here is that the S&P and the NASDAQ closed at records on Thursday ahead of the holiday weekend. The Dow still not quite at that record level as of that date, so it is falling the least of the three majors going into the open this morning. Let's now turn to our top stories of the day, with stock futures falling on the first full trading week of Q3 as tariff uncertainty reignites. The Trump administration says tariffs will go into effect August 1st instead of this week, and Trump's so-called Big Beautiful Bill was signed into law in a 4th of July ceremony. Meanwhile, the president is lashing out at Elon Musk after the Tesla CEO says he formed a new political party. Tesla shares are falling. Joining me now, Yahoo Finance's Ben Werschel, Jennifer Schonberger, and live at the NASDAQ, Ali Canal, to help us make sense of all of these headlines. And the thing that probably needs the most sort of sorting through interpretation is what is now going on with tariffs. So, Ben, I'm going to start with you here. We've all been watching July 9th. Should we still be watching July 9th, or is August 1st now the date? Explain it for us.
Yeah, for sure. We've had a weekend of pretty confusing messaging from the Trump administration. There's a lot of different messages here, but I do think you're right to zoom in on this August 1st deadline, because a lot of market observers are taking that as a sign that you can look past a lot of this week. We're going to learn a ton about Trump's trade approach this week. We already have learned a lot about with his post overnight about BRICS, a renewed focus on that you mentioned at the top of the show. But and Trump has announced that letters are going to be going out at 12 noon today throughout the week, with a combination of letters and deals where he's going to dictate rates that will be important. But the most important detail, I think, for markets at the moment is this August 1st deadline, suggesting that traders are going to look past this a little bit, because we may get new rates today, but they're not going to be going into effect, and so no one knows for certain exactly what's going to be going into effect. This comes on multiple fronts here. There's a block of smaller trading nations that are expected to just get a letter that dictates these tariffs, and we get larger nations that are in the process of ongoing negotiations, and they may get dictated as well, but they also may get kind of framework deals announced. A third option here, just to add even more uncertainty, as one of Trump's advisors, Stephen Moran, put it over the weekend, countries could get their dates, quote, rolled. So there could be a whole lot of different ways that this goes, but with the bottom line that there's not going to expected to be a huge number of tariff changes this week, at least in terms of the actual rates.
So all of this then leads to the complications, Jen, for economists and for the Fed trying to figure out when and how the tariff impact is going to be felt. So how are you thinking about, what are you seeing this morning around that?
Yeah, Julie, if you were looking for more certainty, you're still looking for it, right? That tax bill signed on July 4th offers more clarity over the fiscal side, and could offer and help boost growth, but that right hasn't been the source of uncertainty. It's really been the tariff rates. What is the effective tariff rate? How quickly could we see that passed on to the consumer? And what are the inflation expectations around that? And the president said that most tariff rates are going to be set by this Wednesday, July 9th, and will go into effect August 1st. Now, of course, the devil is going to be in the details, but it looks like we could see some more clarity on what the tariff rates could be. They could range, it sounds like, anywhere from 10% all the way up to 70%. And it's going to depend on how high of a tariff rate we're going to see on a major trading partner, which would have a greater economic impact, versus a higher tariff rate on a smaller trading partner. But the bottom line here, Julie, is that it looks like we could see a higher effective tariff rate, and it's going to take longer for all of this to actually kick in if it doesn't get implemented until August 1st. So that means that the Fed is going to be holding rates higher for longer, certainly through the summer. That is going to deepen the divide between the Fed and President Trump. Remember, it's about how broad these tariffs are and how high those tariff rates are.
Yeah, most definitely. And that's, not, as you said, not what the president wants to hear. Meantime, Allie, if I look at futures, yes, they're lower, but they're not lower by much. And I'm thinking of a food that you eat on Tuesdays that the market has talked a lot about. It feels like that this is the taco trade all over again.
Yes, markets largely looking past a lot of this tariff uncertainty. You just mentioned the taco trade, this acronym that Trump always chickens out. So in the near term here, it doesn't look like that's going to impact equities that much. But as Jen was alluding to, it does increase a lot of this uncertainty for the Federal Reserve. And if we take a look at treasuries, they've been rallying. That's pushed yields to the downside here. But if you think about a few months ago, there was a lot of uncertainty around tariffs along with the one big beautiful bill. And yields surged, and because yields were surging, that did put more downward pressure on U.S. stocks. So if we see that rate of change escalate at any point, if investors start to get a little disappointed that we might not have rate cuts in the near term, that could be a possible headwind for stocks. But it seems like right now, investors are really looking past the tariff back and forth until we actually see this being reflected in the data and this being reflected in the growth and inflation outlook. That's not going to be a big concern for stock traders. And even if you look at the job market, right, we got that very solid labor report last week, and the odds of a July rate cut pretty much evaporated at that point. So right now, that doesn't seem to be a major headwind for stocks. It's really going to be earnings and what we see this upcoming earnings season. And right now, we do have a very low bar. So if companies are able to hurdle over that bar, that is building the case that stocks could continue to go up from here, even at these record highs.
And I just want to mention as well the tax bill, which was indeed signed on July 4th, which is the deadline the president had been shooting for. It feels more like something that the market was expecting than necessarily a catalyst. Jen, I know you've been looking at that tax bill. I know you and Ben have been watching it closely, but it does feel like from an uncertainty perspective, companies are perhaps more focused right now on the tariffs.
Exactly, Julie. I think that, there was kind of this understanding that we were going to see this tax bill passed. It was just a question of, what we're going to see in terms of permanence. I think businesses are more focused on that 100% expensing, and that has been made permanent. So I think that's going to be a big deal for capital investment. I think we could see that later this year, and maybe that offsets some of the uncertainty and the impact on the tariffs. But I want to come back to one thing that Allie mentioned that we've all been talking about on this network when it comes to the impact of tariffs on the economy. And there's two sides to look at right here. There's inflation and there's growth. And the Fed has been very focused on the inflation side of the mandate and whether we're going to see a one-time increase in pricing or if it could be something that's longer lasting, depending on how long it takes tariffs to make their way through prices into our economy. But we also know that the consumer is not able to stomach a lot of price hikes at this point. So if we do see a lot of these tariffs passed on and higher inflation, that could actually hurt growth. And if it does hurt growth, and we don't end up seeing that much inflation because growth is being hurt, then we could see a different equation for the Fed. So I just want to point that out.
Yeah, and I want to turn to one other story that we're watching this morning that's affecting NASDAQ futures in particular. I'm talking, of course, about Tesla. Elon Musk, I think, not actually filing the paperwork yet, but talking about starting a new political party. His investors, Allie, don't seem terribly excited about that.
Yeah, you're seeing shares off. I think last I checked, we're down around 7% in pre-market. And if these losses hold, this will be the biggest intraday stock drop for Tesla since that big blow up that Elon Musk had with President Trump a few weeks ago. So, unfortunately, if you're an investor in Tesla, you're used to this volatility, right? The stock is often tied to the moves and behaviors of Elon Musk. And you can even look back in November and December when we saw Tesla shares surge when Trump and Musk were buddy and the president just won the election. So there's that is a reality that I think investors are pretty aware of at this point with Tesla. But we did see William Blair downgrade the stock to market perform. They cited the One Big Beautiful Bill, the elimination of those EV tax credits as a headwind to this stock. But other analysts have said that, this distraction from Elon Musk when it comes to politics and other ventures that he's having outside of his businesses, that is also affecting this company because we have seen Tesla delivery sales struggle. So there's certainly bears on the street, but there also are a lot of bulls, like, friend of the show, Dan Ives from Wedbush. And the bulls are really focused on areas of the business outside of EVs. That includes robotics, that includes autonomous driving. So a lot of that more nuanced technology that could potentially be a further tailwind for this company outside of the actual car productions.
Right, all the stuff that doesn't make money yet, Allie. I also thought it was really interesting in that William Blair note, specifically not just the elimination of the EV tax credits, but really taking the legs out from under the market for Tesla selling those EV tax credits to other companies. So that was really a key thing there. Ben, finally, I want to end it with you because with Musk coming back to, talking about creating this political party, the president kind of dismissed it, which was also interesting given their one-time tight relationship.
Yeah, for sure. I think there's so many open questions about what this party is. You noticed there was a back and forth this weekend over whether he'd filed the paperwork with Musk denying it. I think the key question to watch on it, and we've already got Trump at a pretty high volume, but will increase the volume by a lot, is whether Musk's actually puts any money behind this. This is sort of in the world of tweets at the moment, but Musk has shown a willingness to put money behind it. And if he announces that he's put money to actually form this, that'll be a different thing. So far, he's talked about it in kind of broad terms. One tweet that jumped out to me is he described this as easy, that breaking up the two-party system is easy. It's very much not easy. It would require a whole lot of money. So that's what's going to be required from Musk if this is going to be a storyline we're still going to be talking about in 6 months.
Well, he has a whole lot of money. The question is whether he is willing to spend more of it on this endeavor. Thank you so much, guys. Appreciate it. Mm-hmm. Oil prices reversing earlier losses amid strong demand in a tight market, even as investors consider the impact of OPEC Plus hiking oil output more than expected in August. Yahoo Finance's Inez Ferre has the details on all of this. Good morning, Inez.
Good morning, Julie. And OPEC Plus deciding to increase oil production by 548,000 barrels per day. That is more than what the street had been expecting. Remember that the street was expecting 411,000 barrels per day, which is what they did in May, June, and July. And by the way, for September, Wall Street is now expecting that OPEC Plus will increase production again as they unwind these production cuts that they have had over the last couple of years. Oil today is trading a little bit higher. Part of this has to do with the fact that the street is saying, look, there is still robust demand for oil. So you have global inventories that are low, which is something that OPEC Plus had cited when they made this decision. And also, of course, you've got the tariff delay till August 1st. That is bullish for oil, and especially if it gets delayed again. Longer term, though, you do have Wall Street that is expecting oil prices to go down on this increased supply. Goldman Sachs is expecting that by the end of the year, you are going to see Brent coming down to $59 per barrel. Right now, Brent is trading around 68 per barrel, so that is quite a fall. And for next year, you also have Wall Street that is expecting oil prices to go even lower. Part of the main part of this has to do with OPEC Plus is now regaining market share, and they are doing this by increasing production.
Ines, thank you very much. We'll check back in with you later.
Thank you.
Coming up on Morning Brief, we count you down to the opening bell on Wall Street with stocks set to open in the red. And we'll get you some trending tickers. We'll break down 3 stocks on the move this morning. And what the S&P 500's bullish technical signal for the second half of the year is. We'll tell you what that is. All that and more coming up on Morning Brief. Now time for some of today's trending tickers. We are watching Tesla, Apple, and CrowdStrike. First up, Tesla shares falling as CEO Elon Musk announces plans to form a new political party. He calls it the America Party. Musk's plans increasing investors' doubts about his focus on Tesla. And this comes after Tesla's second quarter deliveries, of course, fell more than 13% from a year ago. Next, Apple appealing a $580 million fine from the EU, calling it unprecedented and saying the required changes to its App Store are unlawful. This coming after the EU announced the penalty in April under its Digital Markets Act. Apple changed its EU App Store policies in June to meet the requirements. And CrowdStrike cut to neutral from overweight buy Piper Sandler, analysts citing the stock's rise over the past several months after it surpassed the investment bank's price target. Still, the firm did maintain a favorable long-term outlook on the stock. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, in a welcome sign for investors, the S&P 500 recently flashed a bullish signal. The index saw its first golden cross in more than 2 years. What does that indicate for the second half of 2025? Joining me now to discuss, Adam Turnquist, LPL Financial Chief Technical Strategist. Adam, it's good to see you. So for those who don't know, the golden cross, right, is when the 200-day moving average goes above the 50, if I'm not mistaken. Or, excuse me, the 50-day goes above the 200.
50-day above the 200.
The 50-day above the 200-day. Why is that a good sign?
It's just another validation of momentum, that shorter-term moving average going, or intermediate term with a 50-day, getting back above the 200-day moving average just exemplifies that near-term momentum is improving. And historically, when you look at the returns following the golden crossover, it looks pretty good. There's been 37 of them on the S&P 500 going back to 1950. The average 12-month return after a golden cross is just about 11%. Over 3/4 of those periods also producing positive results over that 12-month period. So more signs of momentum continuing if we need any more. When you look at the recovery we've had off the April lows, certainly momentum. Very bullish on the market anywhere you slice it. A little bit overbought here on a short-term basis when we look at some of the internals of the market, but certainly an impressive first half and an end to the first half.
When you slice and dice that golden cross indicator a little bit further, I know you watch sort of when the 200-day moving average is advancing versus declining going into that cross. What does that tell us about how large the returns tend to be following that?
So we broke it down by a golden crossover when the 200-day moving average is upward sloping or rising. Forward returns there, not as good as that 11% number I previously quoted, but still positive at around 6%. Now that's a little bit below the average annual return for the S&P over the last 75 years, but still relatively high positivity rates. Where you get the big returns, and this is what we witnessed in January of 2023, is when you have the golden crossover occurring below a declining 200-day moving average. A lot of these are V-shaped recoveries coming out of major bottoms. The average 12-month gain there over 18%, as you can see. So a little bit of a difference between if it's upward sloping or downward sloping, but end of the story is really still positive for the S&P 500 12 months later.
Adam, I'm really curious as a firm how you guys use this technical analysis sort of combined with the fundamental backdrop where you've got sort of this shifting tariff deadline, right? You have the bill that just passed, you have geopolitical tensions going on, just a lot of other things, as always, to watch. So how do you sort of integrate that with the technical strategy?
The macro has been exceptionally complex, we'll call it, in the first half. And even if we look out to the second half, of course, technicals tell us one part of the story and what price action is doing, but we also have to marry that with the fundamentals and the macro environment. And when we look out at the second half here, we're constructive on the market. A little hard to get around the valuation and earnings growth story, especially with all of the uncertainty. We don't have really a lot of concrete details on trade. Moving in the right direction, I think the market is okay with that for now, as we'll see how July 9th shakes out and if the August 1st, what countries are going to be implemented for that August 1st, assumingly August 1st tariff implementation. And of course, just what the Fed is going to do. We have Fed on hold. Maybe they will cut in September. Doesn't look like a July rate cut is likely. So that macro backdrop, not exactly conducive for the momentum we've seen continuing in the second half. I wouldn't be surprised if we get a little bit of a pause or pullback, maybe late summer for the S&P 500.
So what are you telling clients to do right now then, given putting all of that together, if you're still expecting, when all is said and done, maybe some modest gains in the second half?
Right now, we're neutral equity markets. So neutral is not negative. So benchmark weight in terms of your allocation to equity markets. And look, we're looking for a potential buy the dip opportunity. That's what we think the market environment welcomes versus chasing this rally right now. So buying the dip on some type of pullback to a concrete technical level, support level for the broader market. That's what we're looking for in the second half here, potentially moving to more of an overweight if the stars align on and cross our strategies.
And Adam, just quickly, if there's going to be a pullback, what kind of indicators would you be looking for that might predict that coming?
One of the indicators is just how many stocks within the S&P 500 are overbought based on RSI, or the relative strength index. Right now, you're getting close to 20%. Now, typically, when you get through that 20% level, that's where you start to see at least a pause, if not a pullback. We also look at price relative to the 200-day moving average. What's that premium above the moving average? We think of it as more of a rubber band. It generally only stretches so far before it snaps back. 10 to 15% is usually that snapback number. If you apply the 10% level, that would be around 6450-ish on the S&P 500. So some potential levels that could struggle in terms of that near-term momentum.
Adam, really helpful stuff. Thanks so much.
Thank you.
Coming up on Yahoo Finance Opening Bid, our executive editor, Brian Sozzi, is joining us now. Brian, what's coming up?
What's not coming up, Julie? Good to see you on this post July 4th show here. Of course, we're going to dive more into all things trade deals. Will they happen? Won't they happen? What sectors will be winners? What will be losers? Also pick apart that big, beautiful bill by the Trump administration. And then we're really going to look into one of my favorite things to cover, all things earnings season. Earnings season kicks off this week with Delta, Levi's, and Conagra. Interested to hear what those companies say. And then, Julie, what will be a morning show today without more analysis on Tesla and that Trump-Musk feud and what might mean to shareholders?
Yeah, fun fact for our viewers. One of Brian Sozzi's favorite pastimes, reading conference call transcripts.
Yeah, look,
He's
we all got to have
folks.
hobbies, Julie. This is mine. I mean, as sad as it may be, it is what it is.
It is what it is. All right, thanks so much, Soz. We'll see you in just a few. That does it for Morning Brief. In the meantime, much more ahead on Yahoo Finance.